All right, all right. Good morning, good morning. How's everybody doing this fine day as the market continues to slide back down? Well, have we found the bottom? That's the question. And a lot of people are asking that same question. Have we found the bottom? Well, nobody knows, right? Nobody knows. All we can do is look at the probabilities and make our decisions based on the probabilities. But I will tell you, this is the S&P 500. I want to show you something. Who's buying? Who's buying? That's green. That means buy, buy, buy. Guess who's buying? This is the chalk and money flow. So who's does the chalk and money flow track? That's right. The big banks, the hedge funds, BlackRock, Vanguard, and State Street. The three monsters of the industry. You know what I'm going to do? I'm going to have Chat GPT paint us a picture of BlackRock, Vanguard, and State Street, and then I'm going to have him show us a picture of us in comparison, retail traders in comparison to those three. How much money those guys control? I keep saying it. They have all the money in the world. The only money they don't have is what's in our pocket, and this is a strategy they use to take it away from us. All right. Now you're saying, no, Len, they don't have mathematical models. They don't have computers. They don't have quant style trading. They got some guy sitting at a desk clicking a mouse. And every time Donald Trump says something, they click, 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 just like we do. You're drunk on your own hubris if you believe that kind of stuff. This is all mathematical modeled out. It's all mathematical modeled out. Look at this. Come and look at this. You think I'm dumb? You think I'm dumb? You think I'm a dummy for saying that? Look at this. Look at this. That was my number right there. We drew that line in the sand, that little blue line right there. See that? Here, I'll make it bigger for you because some of you have bad eyes. See that little blue line right there? I drew that little blue line. When did I draw that blue line? I drew that blue line January 1st. If you don't believe me, go out and look it up on the videos. It's all recorded. You can go back and look. I've been calling that number right there since January. And how did we didn't know. Nobody knows. But what made us think the market was going to come back down to that blue line? Well, because of Fibonacci bow ties. Fibonacci bow ties, Lan, you just made that up today because you wanted to show that you were so smart that you put that up. Nope, 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 nope. No again, no again. Fibonacci bow ties. It's published in my book. It's published in my book. You think I made this stuff up today? No, it's published in my book. You can go search Lan H. Turner on Amazon. It's a 238-page book that shows you this exact picture in it and says this is what markets do. And then this is how you figure this out. And this is how you count it. Yeah. Fibonacci bow ties are a real thing. It's a way we reverse engineer BlackRock's mathematical quant system. That's all it is. All it is. I mean, that's pretty cool. That's pretty important, right? Being able to reverse engineer BlackRock's mathematical model. I mean, that's pretty cool. But that's how you do it. That's how we do it. And so we come in here and look at this. It came right down to it. I'm not going to say it, Chad. Not going to say it. A train on rails. Like a train on rails. I couldn't draw this any better as an example in my magazine. Actually, I did. I drew it exactly like this as an example in my magazine. So that's exactly what I did. So does it mean it can't go down further? No, it certainly can. Look, we got 130.9 sitting here too. That number right there is called the golden ratio. All right. Now 61.8, a lot of you have heard 61.8 is a golden ratio. And that's true to the retracement side. All right. But 130.9 is the golden ratio to the extension side. But this is 100%. See that? And it's 100% because the market has a tendency to go through these little bow ties. What they do is we call it turning resistance, which is right here. This is the resistance high, right here that came in back in December 1st, 2022. And then the market flushed back down, giving us a bottom right here. And this, of course, nobody cared about that. You didn't hear that in the news at all. Not one little bit. That's because Joe Biden was in office. So nobody even told you about that. You know how the mainstream media is. This is not important to them. You didn't have Jim Cramer out there having a coronary on TV during this time frame. Why? Because his party was in office. So, it's just a minor pullback, right? Just a minor pullback over here. But when it happens up here, oh, the world's falling apart. Okay, this was Corona. We shut the whole damn world down for Corona, right? And the world economy shut down. And that's what happened in Corona. And then this was the recovery. And if you look, I drew another one of my magic blue lines right there at the peak of that one. And the Fibonacci bow tie comes back in here just like this. Bump, bump, bump. And where does it come to? 100%. Now it came just a little bit shy, right between 100 and 130.9, that golden ratio. It came almost right down to that golden ratio. But there's it came down. It came down right back down to that previous high, which is right there. And that's the Fibonacci bow tie. So it tied that baby off and started to go back up. And that's just how they do it. That's just mathematical models. Now, they build their mathematical models around, they like to use fundamental reasons. We always say that the fundamentals and the technicals kind of work hand in hand, right? Now, this is obviously technical analysis and mathematical modeling, but they like to use fundamental analysis to help push their quant style systems in these areas. Now, does it mean that the market doesn't have more downside potential? No, it certainly does. But if we look back in history on the S&P 500, those Fibonacci bow ties rarely break below the previous high. Okay, it's just not a thing that the S&P does. Now, it happens a lot. It happens a lot on. So you had one here. That drawdown it was real shallow, even off this big one here. But you can see that going back in time, that's just how they do this thing. And you're like, well, just making this up. Nope. Go look at it on 100 different. Go look at it on 10,000 different charts, like I have, and then you'll have more confidence in it. Okay. So, and it doesn't just happen on the indexes. It happens on every single chart, and the bigger charts. I will admit, the bigger charts, the bigger markets, like the S&P 500, top S&P 500 stocks. It happens more cleanly in those markets because those are the markets that those big boys trade more often. They have a lot more holdings in there, right? Smaller markets, things that you might find in the Russell 2000, they still do it because, smaller companies, smaller hedge firms that still trade everything on quant systems, they still do the same thing. It's not a secret. The strategy is buy low, sell high. Oh my gosh, Lan, you just made that up, didn't you? Buy low, sell high. Nobody ever said that before. Oh my gosh, what are you talking about? Buy low, sell high. Oh, I can't believe you would say something like that. Make some shit up like that. Oh, geez. Make up things like buy low, sell high. If it's so common, why don't you do it? Why don't you do it? Retail traders, we don't buy low, sell high. We like to buy high and sell higher. And actually, we like to buy high and sell low because we think that what we're supposed to do is we're supposed to buy when the market starts going up. How many of you have been buying right now? Oh, no, I'm not buying right now. Why? Because the market's going down. I thought you were supposed to buy low, sell high. Lan, you didn't make that up. You're supposed to buy high, sell higher. You're supposed to buy low, sell high. Lan, that's obvious. Everybody knows you're supposed to buy low, sell high. Well, why aren't you doing it? Well, because I don't like to buy low, sell high. I like to buy high, sell lower, sell higher. And then I don't ever sell when it gets high because I want to hold on to it because I'm making all kinds of money. So I wait till it falls and goes below my entry price, my average entry, and then I sell. Oh, but I'm never going to sell. Never, never, never. Okay, well, nothing wrong with that idea either. Just never, 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 never sell. And then, die with all your money in the market. That works too. Do what you want. Everybody do what they want. It's free world. Do what you want. I'm never going to sell. I'm never going to sell. Okay, well, don't ever sell then. And then why are you doing it? All right, so here we go. Let's go and talk about some other markets. That's just where we're at. We came right back down, and you know what? This knowing this kind of stuff, having these types of knowledge about having this type of knowledge about the markets, and being able to mathematically model this thing out and see from past history what these markets have done historically speaking over and over and over again helps me sleep well at night. All right. Helps me sleep well at night. You don't have a lot of money in the market. You want to sleep well at night? Well, learn how to do this. What's the best way to learn how to do this? Buy my book. I didn't write it for my own purposes. I wrote it for you. And I don't make a whole lot of money on that book. It's not like I'm getting rich selling books. But I wrote that down. It's the manual to the class. So actually, I teach at the university. Most of you know that. And so I have to have a class manual, right? And so that's the manual I wrote for my class. And there it is. I put it on Amazon so you guys can get it. If you come to the class, you get a free version that's digital. I mean, it's not free. You have to pay the tuition to get into the class, right? So you get the digital version when you come to the class. But a lot of people like paper between their fingers, and it's a big book, so you can lay it out on the desk, and it's real nice. So if you want it, you don't have to have it. Nothing says that you have to have Land's book, unless you want to know how to make money in the stock market. I don't know, or lose money. I got to put on both sides. Make money, lose money, make money. That's the rule. Got to say both sides. If you're going to make money, you can lose money. All right, here we go. Let's go in and start looking at some of these other markets. I'm tired of looking at Apple. We always start off with Apple. Apple's in the 3-drive pattern. Drive 1, drive 2, drive 3. It's right down here. Look at that. It came right down to the 200%, just like a train on rails. Right there, touched that 200%, and then it backed off. Is it going to come down further and make another drive? It certainly can. I mean, markets can make 4 drives. It's really rare for markets to make 4 drives. So right down in here, we got this little Fibonacci bow tie coming down in here, a little Fibonacci projection. We got 161.8 right here. It's hitting 130.9. Remember, we mentioned that earlier. 130.9 is the golden ratio to the downside. We've got 3 drives on the way down. Okay, drive 1, counter trend, drive 2, counter trend, drive 3, down to 130.9. I think that it's going to find its bottom right here. I think it's going to reach around and grab its ass and say, hey, there it is. I just found my bottom. And we're going to see this thing bounce around in here for a little bit. We might see a little up, a little down. It might break that a little bit and come in here, give us what we call a Wyckoff spring. But it's going to come in here. I think this is the bottom. I think we're going to see it bounce around in here. Why will it bounce around in here and not just go straight back up? Well, nothing says it can't just go straight back up. People get excited and it starts to go. Things go, markets go straight back up sometimes. Again, it's rare, but it doesn't mean it can't happen. Certainly can. It's rare. But this is generally what happens. The market will come down and it'll come into what we call an accumulation stage. All right. Now, these guys have been buying all the way down. All right. Here, they started to buy here. I'm going to show you something else, too. Don't run away. Don't say, I know all this. I'm going somewhere else. No, wait a second. I got something really cool to show you. But see this? This is the big boys. These are buyers. Now, remember, for every seller, there's got to be a buyer. And somebody's got to buy the other side if you're gonna panic and sell out, which is what happened here, right? Lots of retail traders started to sell in here. Sell. They were pretty smart. They're trying to sell at the top, right? That not a bad strategy. But somebody's got to buy that. So the big banks come in here, they step in and they say, all right, I'll buy it up. Okay, we'll take your shares. And then it comes in here and it bounces back up, comes back up, gives us what we call an ABC top formation, or a 1, 2, 3 formation. All right. So ABC, that's our ABC. C has to be lower than A. Otherwise, we're no longer in a downtrend, right? This is a reversal pattern. We'd be still in a continuation of the uptrend. Higher highs and higher lows makes an uptrend. Lower highs and lower lows makes a downtrend. And so the market has a tendency to go through 3 drives. All right. 3 drives up, and then it makes a 2-drive retracement. If it's going bearish, it'll make a 3-drive retracement, all right, which it did. So we're in a bearish market. And then the market can come back up, make a little head and shoulders formation and start back up again, or it can come up, make this little thing like this, and it can go down one more time. Nothing says it can't do that. And if it does that, usually we'll go down 2 more drives. Okay, don't usually just do one drive. If it goes down one more time, we'll go down 2 more drives. So it'll make a little bounce up and then it come back down again. So it could go through this little stage here and then fall one more time. That's called a reaccumulation. All right, or a redistribution is actually what that one's called on the way down. It's called a redistribution. So we're going to come in here and we're watching this market. And we're going to see if it'll turn and start to rally. We got lots of good news. I mean, if you come in here and look at some of these numbers that have been coming in, inflation is down, interest rates are down, crude oil prices are down, consumer goods are down, eggs are down. I mean, everybody's more worried about eggs than anything else. Eggs are down, eggs are up. Oh my gosh, breakfast got $1 more expensive. Okay, so eggs are a real important thing. People think that that's a good indicator of the CNN. That's the economy is based on the price of eggs. Of course, one of the nice things that Joe Biden did for us on the way out of office is he killed all the chickens. Killed all the chickens. Kill them all. Kill all the chickens on the way out of office. So I'm sure you've all seen that little meme. It's funnier than hell. Joe Biden kills all the chickens in the meme, and then Trump gets into office and he's out there feeding these little itty bitty chickens, right? Trying to raise the little itty bitty chickens. He's out feeding them. And then underneath is a CNN thing. Price of eggs have gone up. It's all Trump's fault. Trump's looking at him. He's trying to feed the little baby chickens after Biden killed them all. CNN's down there freaking out. The price of eggs are down. It's all Trump's fault. Trump's feeding the little baby chickens after Biden killed all the chickens. It's really funny. I'll see if I can find it. It's funnier than hell. Anyway, I'm sure you guys have all seen it. It's all over the internet. So we got FOMC coming in today at 11 o'clock. You got Fed Barkin speaking, 9:30. So this is tagged as red at 11 o'clock. So we'll see what that does to the market. These guys, remember, they don't like Trump. They're going to come in and they're going to try and do something that gives you negative. Of course, they're politicians too. So they're like, everything's really good. Oh, but everything's really bad. Oh, everything's really good. Oh, but everything's really bad. But they'll end with everything's really bad. Okay. So that's what'll happen today. So it'll freak the market out. And then tomorrow, Thursday, we got core inflation forecast to be 3. So they're in its previous was 0.2. So they're going to estimate that inflation is going to go back up again. Year over year, 3.1. So that's down. So on the longer term basis, they're forecasting that it's going to go down overall, but up on the short term. And then the inflation rate month over month, they say it's going to go down, which will be good. Inflation rate year over year, they're saying it's going to go down. So if inflation goes down, that should be good. Looks like they're going to say CPI is going to be up. And then that's CPI is our consumer price index. Ooh, look at these ladies. What the heck is that? Advertisements. Why are they showing me pictures of cute girls? My wife has been looking at this, I'll bet you. No, it's probably me. I probably look at these cute girls I want to buy some clothes. That's what I wear in the afternoons. Consumer price index in the United States increased to 3.9 points February, points January. So the consumer price index. All right. So the consumer price index has been going up. 25, 20. I don't know. We'll have to look and see. We'll have to wait and see what that does. We don't know if that's going to make the market go up or down. All we did was going to move it. Initial jobless claims. Fed Logan speech. Fed Goolsby. Oh, Goolsby gets to speak tomorrow at 9 a.m. There's no better name for a Fed guy than Goolsby. That's a perfect name. Do you think Trump's going to get rid of the Fed? Wouldn't that be cool? Wants to get rid of the IRS. That would be the best thing ever, in my opinion. Who likes the IRS? Just the people who work there. That's it. That's it. Oh, and the politicians, they like the IRS. All right, let's get back to what we were doing over here. So we got some news coming in. This week's going to be a very important news week. All right, so I got something I want to talk to you about. I want to show you something really cool. Oh, let's look at this. This is also, the big boys are buying up right here, right? But look at this, big spike down. They're buying. That's because a lot of, a lot of the panic sellers are selling out here. Panic, panic, sell, sell, sell everything I got left. Sell some of what I got left. Sell a little bit of what I have. Right? That's the name of the game. That's why they drive it down 3 times. Sell a little bit of what I have. Oh, it's coming down. I'll sell a little bit of what I have. I'm going to hold on. What about the guys who don't sell at all? Oh, I'm never selling. I'm holding on to this baby right here. I'm holding on. And then it comes back up. See, I was right. I shouldn't have. Then the guys that come in here, I'll sell a little bit. They start buying again. Buy, buy, buy. Oh, look, I got a little indicator. It tells me to buy, buy, buy. So they start buying again. They put it in there. And then the big banks come in here and go, fooled you. We ain't going to support that buy. Down it goes. Now, oh, sell, sell, sell. And so the guys who didn't sell here, they start to sell here. Sell, sell, sell. Panic, sell, panic, sell. And then it starts to come back up and they buy a little bit more. Oh, I was wrong. I should have bought in. Oh, look, it's going to go back up. Buy, 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 buy. And then these guys are like, buying in here because they're like, whoa, this is going to be nasty. We're going to drop this thing one more time. And then boom, like that. And then everybody who didn't sell out here and didn't sell out here, they can't hold on any longer. And they're like, oh my, sell, sell, panic, sell, panic, sell, panic, sell, panic, sell, panic, sell. Who's buying? BlackRock, Vanguard, State Street. They're buying up everything they can get their hands on right now, man. I'm telling you, they are loading up for bear right now. Why? Because they buy low, sell high. That's how they do it. So they're getting everything they can get their hands on, and they want more. So they're probably not going to run the market. You never know, though. I mean, sometimes retail traders will pop the market. They got all of us get together at once, we can move the market. But for the most part, it's just the computers that are doing this. And they want to load up on a whole bunch more because they know this market's going to go to the moon at one point. They're going to drive that thing back up. And they want a whole bunch of shares down here. That's why they go what they call an accumulation stage. And if they can, they would love to push it down one more time. Oh, they would love that. That would punish Trump even worse. And they would love to do that because, those great big banks and hedge funds are all driven by a bunch of Democrats. It seems like whenever a Republican gets a whole bunch of money, he becomes a Democrat. Although, that's not true for Elon Musk. He was a Democrat and made a whole bunch of money, and then he became a Republican. So that's kind of crazy. Became conservative, which is really rare. Usually the other way around. So anyway, they'll go through an accumulation stage, I believe. I believe we're going to see just a bunch of waddling around down in here. It's called accumulation. All right. And how do they accumulate a whole bunch of shares without driving the market higher? Well, they do this thing they call buy, sell, buy, sell. So they'll buy 10, sell 9, buy 10, sell 9, buy 10, sell 9. So what does it cause the market to do? Causes the market to go crazy. And it goes all kinds of places. It goes all nutty, right? So the market has no trend. It goes up, it pops back down. It goes up. It's terrible to try and trade it. Everybody's always trying to get in. Oh, it's starting to go. I'm gonna miss out. And so they try to jump in, and then it only flushes. They take their money away, and they do that. They do that for a while. They might do that for a month. All right, it'll just sit there and waddle sideways. And then when they've accumulated as many shares as they can get their paws on, right? And then they'll run the market, and the market will start to rally, and it'll get a nice big push in there, a very obvious buy signal from all the retail traders, buys, and we'll start to buy. Oh, it's like rats to cheese. We just can't stand it. We can't hold ourselves back. We're going to buy. And we start to buy all the way up that trend, that big new trend, and we start building a big old giant position. And oh my gosh, we got all kinds of positions. Oh, we're making money. Oh, we're so happy. And then who sold out of the top of that trend? Well, big banks who had all of them down here. Because for every buyer, there's got to be a seller. And who's selling to you? Oh, it's the big banks and hedge funds who bought down in here, bought this whole thing down, dollar cost averaged all the way down. Now they sell out all the way up. Sell, 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 sell. And we buy. And when it gets up to the top, who doesn't have any shares left? The big banks, the big hedge funds. Who has all the shares? We do. What does the market do? Flushes that far. Who loses all their money? We do. Who had all the money? The banks and the hedge funds. It's just called buy low, sell high. Just the game that's played. And they tell you, buy low, sell high, guys. Just do what we do. Why don't we do it? Because we don't like to. We like to sell out, right? We like to sell out. Look at this. Here's an example. This is Apple. Look at all this coming down through here. Look at this. Who's buying? All the big hedge funds, banks, hedge funds. They're buying all the way down this this trend. Who's selling? We are. Oh no, Apple's going down. Sell all my Apple. Sell. Get out. Oh no. Bad news, bears. Who buys it all down here? The big banks and hedge funds. See, that's why it's green down here. They're buying, 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 buying. Who starts to sell right here? The big banks and the hedge funds. Sell, sell, sell right there. Well, who starts to buy? Right here. This is the retail side. This is the banking side, right? So these two indicators are just the opposite. This is what they're doing. This is what we do. All right. So we get our signal from the MACD. We all love MACD. Oh, MACD is the greatest in the world. We like to buy when MACD says to buy. So we start to buy here. Who told you that? Well, it was the big banks and hedge funds. They're the ones who told you to buy when MACD crossed. Why? Because they want somebody to sell to. You think it's not all manipulated. It is. It's just a game that's being played. They even teach you how to use the indicators. Yes. Oh, yeah. When MACD crosses that line, you just start buying, buddy. Just load up all you can. Buy as many as you can. Why? Because that's where they start to sell. Sell. They need somebody to sell it to so that they can make money. So they sell all the way up the uptrend. Sell. Look at this. Sell. They sell some more. Oh, sell. They get a little buying right in here just because they ran out of shares and more guys want to buy. So they buy a little bit in here. And then they sell them out up there. And then they sell. They get rid of everything they got right here. They got nothing left. They're completely out. Sold everything they got. So then the market flushes back down. All the retail traders, we buy, or sell. And they start to buy, where these guys start to sell. It's just the game that's played. Just how it works. Over and over again. All we're doing is going through a bigger move right here because this was a big, tall move, which you saw down here. Big, huge move. They had to sell a lot out, right? They were out. They needed more shares. They bring it down here so they can buy some more shares. They can do it again. Do it again. Here's Amazon. Same thing. Just go look at it. Just go look at the history. You can see the same thing. Amazon, come right down here, hitting that 90%. I always put a line at 90% because markets don't like to do 100% of everything we expect them to do. They'll go down and get close, 90%. But here's the 100%, and we got 130.9 down there. That blue light still has to come and intercept for it to be going back up. All right, so it'll probably go sideways a little in here. I think we're going to catch our bottom right in here. Reach around, grab yourself. See if you got a bottom left, okay? And then there we are. That's where we're at, right there around that 61.8 sitting there right now. That's kind of an important number to them. Doesn't mean it can't go lower. Certainly can. We got 90 and 100 sitting down here looming at us. And those are important numbers. And you can see we got a really important number right here too. Right there at 100. So, all right, guys, we do have some downside potential on Amazon to see this thing come down a little bit more. So keep that in mind. If you started buying in here at some of these locations, you probably wouldn't feel bad. You could start to do a little dollar cost averaging. Just don't sell the farm. Just don't back up the truck and the dump truck and throw every penny you got into it because there's still some more opportunities to buy down here. Bristol Meyer, man, look at that thing tank. We put a little, well, this is a good example for us. We put a little, I'll come back to this if we got time. But we put a couple little strategies on here, and we're building a spreadsheet around it, right? So let me pull that up. I think I already have it up for us. Where is it? There it is. So there's a little spreadsheet. So we sold our first one. This is where we bought. So this is the one we bought. We paid $2,700 for it. This is the first one we sold. We made $276. This is the second one. We're going to make $274. This, oh, that was a put though. That was a put. So we have, that one can actually lose money. So we got to be careful on that one. But this is another call and I forgot to fill in all the information. So I got busy. I'll put that in there. But we collected on that one. What is this? Let's get rid of this for a second. That's our, oh, we got to, if we got time, I'll go in and we'll update our UBI portfolio. We got to do that today too, but Lane's just still pontificating about accumulation distribution. We're starting to put together a spreadsheet. So we put a little covered call. Ooh, look at Bristol Meyer. It's coming down with that nice little head and shoulders formation. We put what's the name? Poor man's covered call on here. And so we got a poor man's covered call and it's underwater right now. Look at that thing. Nasty. Had a nasty drop in it. But I wanted to put this on. I thought that this might be a good market to put that on, and apparently not. We're down $1,600. Okay, so Google. How much farther has Google got to go? Oops, don't move your red line, Lan. Keep that in there. Okay, so Google, we can do a Fibonacci projection. First of all, let's do a, so that was our first leg of the Fibonacci bow tie, but we're going to go the other direction with it. We're going to go from here to here to here. We came down and touched 61 right there. Whew, that's a long. So it made a 61% projection right there. So it came down and bounced off that 61.8 right there on Google. Now remember, they got individual little, not little, they're big old quant systems that run these. All right, computers. The big boys run these with computers. They trade these with computers. And that's why the markets, we can reverse engineer them and we can kind of figure out what they're doing. We can get a pretty good idea because they use all of these same formulas. They use, where do you think we got them from? It's the Fibonacci formulas. Okay. So all this Fibonacci stuff is built into their systems, into their quants. And so now we're going to come in here. We're at 61.8. Remember, we got 90 and 100 down here looming. Doesn't mean it has to come down here, but it's got high probability of coming down into this region here. That's kind of just an ABC. It's called a reflection. You want to know who come up with that idea? I don't know if this guy came up with it, but he sure popularized it. It's a guy named Wells Wilder. How many of you know Wells Wilder? That's a book. That's a really good book right there. Can you see the title? I don't know if that little, every time I try to show it, it goes away. Can you guys see that title? Green screen stuff. There, that's a really good book right there. If you can get your hands on one, I think I paid like $120 for this book. It's called The Atom Theory of Markets, or What Matters is Profit by Wells Wilder. And if you go through this book, it's really good. It's really old, but it's like the foundational structure of a lot of this stuff. And you can see in here, if you can see it, this is where he talks about this exact stuff that we're doing here with this little calculator. All right. And he even does this little thing here. He's got kind of a little, you ever see this? Like, it's like, we call it onion paper. See that? He's got a piece of onion skin in here in his book. And he's got on it a little chart. Can you see that little chart? Why can't I get the chart to come up? Come on, there we go. See that little chart on the onion skin? He takes that and he's got two charts, one on the left side of the screen and one on the left or on the right side. And you move that onion skin from one side to the other. And this is back before they had, the ability to do it like we do it now. But he would have you draw that on there, and he would have you trace it and retrace it. That's where this whole idea came from right here. All right, Wells Wilder. And so this is that mirroring projection. And that, if you can get your hands on that book, I don't know. Losing my voice. Hold on a second. You know, it'd be fun just for kicks and variety. We should come over here. Let me see if I can pull up. And let's go over here. Oh, look, now I'm getting an ad for Wine Shelf instead of Pretty Girls. Oh, well, too bad. Too bad for you. All right. So let's come over here to Amazon. Amazon.com, and we're going to search for Wells Wilder. Wells Wilder, The Atom Theory of Markets. See if that comes up. There it is. Atom Theory of Markets. How much does that thing cost? Oh, look, you can get one for $75. I paid $120 for mine. Other used from $62. You can't buy them new. They don't publish them new. The only thing you can get is hardcover. Buy that one. See all buying options. So there's one for look. This guy wants $171 for it. $167 used, except $173. Somebody is going to go out there and get this one right here for $75. That's it. Used. Somebody's selling theirs for $75. But look at all the others. If you don't go get that one for $75 right now, you'll miss it because there's only one. You can't buy them new. They're only used. And the rest of them are like this one here, 171, 167, and 173. So that's a bargain right there at $75. Or you can just come and listen to me. I'll just tell you what's everything that's in there. But I already tell you what's in there. You want the book where I got the information from. That's it. The Atom Book of Theory. What matters is profits. All right. That's a really good book. That's where a lot of these things that we talk about in here came from. All right. Like all these Fibonacci projections and retracements. And you hear me call it once in a while the reflection. That's where he calls it reflection. Okay. That's got some good stuff in it. But what's it going to tell you? It's going to tell you how to do this right here. It's going to tell you how to do this. So if you want to go spend $175 to learn how to do this, or you just come with me and watch me and I'll do it for you. And that's what you're going to learn in the book. But if you want that book, that's where I got it from. Okay. And of course, this is what we was taught at the Board of Trade. So this is where I actually got it taught to me by a guy by the name of Larry Pesavento. Larry Pesavento. When I was in the Board of Trade, we used to call him the godfather of Fibonacci. And let's go back over to Amazon. I think he's got a book too. I went down to his house and traded with him once. I met him at the Chicago Board of Trade. John Person introduced me to him. Let's go Larry Pesavento. Larry Pesavento. Trade what you see. Why trading? Trader's Guide to the Financial Astrology. He got into astrology, and you know what? It's believe it or not, it's kind of funny. It's a lot of coincidences there. And then Fibonacci Ratios with Pattern Recognition. This was the book that he was publishing, working on when I met him at the Board of Trade. And then that's the one he was carrying around with him. Profitable Patterns for Stock Traders. Larry Pesavento. Larry Pesavento, The Open Price Principle, Larry Pesavento, Planet Harmony and Speculative Markets, Larry Pesavento, Astro Cycles, Larry Pesavento, Essential Trading Tools, Larry Pesavento, Private Thoughts from Trader's Diary, Larry Pesavento, look at all of his books. Larry Pesavento, he's a really good guy. I really like Larry. I went to his house and traded with him one time. It was really fun. This guy's he's really cool. He's a really neat guy. All right. So if you want to buy some Larry Pesavento stuff, this is a good book. This book has a lot of the Fibonacci patterns in it. This is where you'll find the Fibonacci bow tie and stuff. Actually, I don't know if he actually has the bow tie in there. He has that's all his Gartley patterns are in that one. That's the Gartley pattern stuff. So anyway, I was able to teach with him at the Board of Trade. He's a really neat guy. All right. John Person. John Person is the one who introduced me to him. Who's John Person? John Person. Let's see. Let's go to Amazon.com. Search John Person. I think there's more than one John Person. There he is right there. Candlesticks and pivot point triggers. There's John Person. I met him in Chicago. Technical trading tactics. Candlestick pivot points. Mastering stock market. And that's it. That's his books. 1, 2, 3. Again, taught with him at the Board of Traders too. He's the one who introduced me to Larry Pesavento. He introduced me to a lot of people. I introduced him to Jake Bernstein, though. Jake Bernstein. Oh, Jake Bernstein. I traded with Jake all the time. We went all over the country with Jake. Me and Jake we were pals for like 2 years. We just went everywhere together. It's Jake Bernstein. Jake Bernstein, the laundromat. I don't know what that's about. Inside the Panama Papers, investigating illicit money networks and global elites. The investment quotation, day traders, futures trading, day trading. This guy's like 50 books. He had like 50 books when I was chasing around with him. Jake Bernstein, the new guy. I think he's still alive, though. Candlesticks, the Master Bible Prophet for Beginners, Intellectual Property. Is that by this Jake Bernstein? No, that's by a law firm. And I think that's the end. This guy's got like more books than Carter's got peanuts. All right, that's Jake Bernstein. Anyway, you got Larry Williams too. Larry Williams. These are all the guys, Larry Williams, that I chased around with. There's Larry. There he is. Long-term secrets to short-term trading. Larry. The problem with Larry is his stuff was really hard to understand. He did all this weird stuff. Not most. I mean, he got a lot of stuff, obviously. But he had some stuff that was like, what the hell are you talking about, Larry? That's really hard to understand. He does some really crazy stuff. He's a really good guy, too. All right. I guess that's good enough. I could go through probably 10 more guys and show you some more book guys, but those are good books to go. Guys that you can go see. All right. Or you can just come here and I'll tell you everything they tell you. Not really. Those guys got lots of stuff to tell you too. All right, there we go. So have we got some additional downside potential on Alphabet on Google? Yes, we do. We're only at the 61.8, which is the golden ratio, but it stops at 61.8 a lot. In fact, you'll see us even when we're day trading. We'll come in here and we'll put an order right at 61.8. The market will come down, touch it, and turn around, take off, and go up. We'll make money doing that. We've done that a bunch of times when day trading. So keep that in mind. All right, Coca-Cola. Coca-Cola's flushing. We got a put option on that one. We're up $500. That's nice. Nicely done, Lan. It's right at the red line, though. What do you want to do, Lan? What do you want to do? You want to hang on to that or take your $500? I don't know. It usually bounces right there. There's that 200 period moving average too. We are right there. Boy, that's a strong level of support. It's going to be really hard for it to break through that because there ain't nowhere else for it to go. The next point is way down here. I guess that's not too far. Well, it's quite a ways. Dunk. 61 is there. I don't know. That's kind of ugly. But that was higher, so that doesn't really work. Don't like it. I don't know. We got some area of support down here, but that's really strong. Let's liquidate multi-leg. Just take all of them off. Wait, put in a call. Oh, we got to. Oh, I see what's happened. This was this is one of our straddles. Let's come in here and sell to close, sell to close. And this is the call side. This is the put side. Now let's just take it all off. Place order. No, it's not going to let us do it like that. Let's see if we can get rid of it with a market order. Liquidate market. Take that baby off. We got some money. Oh, come on. It's not going to let me take it off. Do it with the limit order. So what do we got to do? 78.68. There. That'll take it off. No, you're not going to let me take it off? Come on. Liquidate. Go this direction. 883. Place order. Why are they not letting me take it off? The volume on it. Where's the volume? Well, how many days we got left? 128 days. 128 days. Nobody's trading it. Volume 1 and 0. Oh. They're not going to let me take it off. Not even in the demo account. Come on. $8.58. Come on. There we go. Got rid of it. Closed position. How much we make? $400. We had to give up quite a bit. Wow, that was some slippage. Okay, I think it said 500, right? It cost us like $100 to get out of that thing. That's nasty. All right. Well, it is what it is. So we come down here to meta. That's how the game's played, man. You want to get out, you got to pay. You got to pay. You're going to take your money. Look at how we bounced right off that 90% line. Just like a train on rails. I told you, sometimes it doesn't like to go to 100%. That's why I have that 90 in there, because it goes there a lot. It's like, I'm going to go down to 100%. No, I ain't going to stop here at 90. I'm too lazy. I'm too lazy. Doesn't mean it can't turn around and drop one more time. We get these little ABC patterns or little pennant formations in here, right? Little pennant formations. Yeah, they changed how my pennant formation tool draws. I think they draw it like this now. Yep. So I think we get a little pennant formation in here. Now, the question is, if we get a little pennant formation in here, is it going to drop out the bottom? Which it should. I mean, technically speaking, pennant formations are continuation formations, right? It doesn't have to, though. Come out the top. If it does, that would make us have a little, that would be a nice little head and shoulders bottom formation. We'd look for this thing to come in here, make a little pullback like that, and then go like that. And then we could come in here with this tool and we could say that's a left shoulder, that's a neckline, that's the head. We got us a little head point there, another little point down here. And the breaking that neckline, that would be a natural trend line. And we'd say, look at that thing, baby, go, 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 rock and roll. So if that's the case, and that's what's going to happen, you might want to be buying, loading up right here on meta. Get you some meta. Everybody step up and get themselves some meta. Of course, if it goes down and breaks and comes back down into these numbers down in here, which are pretty common, there's your Fibonacci extension right there. That's your golden ratio to the downside. Then you have to take this whole thing and you move it all down here to the next one, just like that. Boom, boom, boom. And then you say, oh, well, that makes sense, because then this goes up here. It's a natural trend line. You create another little trend down in here. We have another little head down in here around 130.9. We end up with a nice little rally and a little right shoulder. And the little right shoulder is higher than the, get up here, giddy up. Can't do it. Can't do it. Can't do it. Send it back. Send it back. Send it back. All right. Then we go this. And that ends up like that again. And away we go. And we get it down here. So that could happen too. So just keep in mind that, you never know. But we got to go from lower highs to higher highs and higher lows. We're making lower highs and lower lows to higher highs and higher lows. So you just kind of move your whole little structure as the market moves. Put it back up here where it belongs, right there. But don't forget, it could come down here and we could do the same thing down here and get us a nice little head and shoulders down here. Right, and that would be the 3-drive pattern if it did that. Because you got drive 1, counter trend, drive 2, right? And we're anticipating if it goes here, that would be taking off on the drive 2. But if we get the 3rd drive down, it would be down here. That would be drive 3. But that blue light's coming in. It's got to break. So this could just flush down here with a 2-second drive, clear down in here and be drive 2. So many things the market can do. Well, all we're doing is trying to reverse engineer what BlackRock's doing with their mathematical model, right? We don't know. All we can do is kind of watch the markets and see where they turn it, because they'll decide. They'll decide when they want to make it start going back up. That's not up to us. It's not up to Donald Trump. It's not up to anybody. It's up to BlackRock. BlackRock, Vanguard, and State Street. Those guys will decide when that market's going to turn. They have trillions, literally trillions and trillions of dollars that they manage. And they will be the ones who decide when they want that market to go up. All right. Microsoft, same thing. NVIDIA, Palantir. We'll talk about Palantir because I like Palantir. I got some money in Palantir. And PLTR. Boom, 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 boom. Came down to 61.8, just like a train on rails. There it is. There's our little choo-choo train right there. Bum, 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 61.8. Does that mean it can't drop and flush and come back down? Nope, it certainly can, because this is a little pennant formation, just like that. There's a little pennant formation and land. You got to forget the old ways, become the new ways. Little pennant formation, just like that. So there's a little pennant formation. And of course, I call them shelves. It's making a little shelf in there, and it likes to fall out the bottom of the shelves. Boom. Might just come back down, make a little double bottom off 61.8. Or everybody's fear could come down to 91, 90 to 100% down in here. All right. And there's that 200 moving average right in there. We already drew that line on the 200 period moving average. They like to bounce off 200 period moving averages too, so they could bounce it down here. That just below that 61.8. It might intercept right out in there somewhere. That would be kind of a thing. That could be a thing. They like to run things in like not just one. So they like to see like multiple things line up at once, and that's where they like to come in at. So they might drop it right down to where that 200 period moving average is at, right where that 61.8 projection is. That would put us a little target point right down in here somewhere. That would be a high probability moving point right in there. The distance, that would put it right there, guys. Could it break below and come down to 100, 100 down here? Yeah, it could, but that would be a sharp little place for it to turn. They might like that. That's like tasty candy to them. All right, Palantir, PLTY. This is the dividend version if you wanted to get into it and get some dividends. They got high dividends on this one. We'll go look at that one over on our portfolio sheet in just a minute. This is Snow. This is Snowy. This is the dividend version of Snowflake. Snowflake. And then SVOL. SVOL's backing off. This is the upside down VIX, and that's what I wanted to go show you. This is Tesla. This is Drive 2 coming sideways. It could hold. It could hold here. I'd like to see a hold here. I don't think we need to punish Elon anymore. Do you? But we got a third drive down. Don't forget, Elon. It's just math. 1, 2. We got one more down if we wanted to go to a full 3 drive pattern. How far would that go with the 3 drive pattern land? Well, I don't want to even make that projection because it's too ugly. Too ugly. All right, let's do it anyway. It goes off this peak right up in here where these blue lights broke. It goes off that one where it broke the blue light right there. You got to do it from there. No, don't do it, Lynn. That's a terrible place to do it from. I know, because look at where it says the next 100% would be down here. But the third drive doesn't always go to 100%. So that would be clear down there. That would be a major punishment for old Elon. Poor Elon would really lose. He wouldn't be the richest man in the world anymore if he did that market went to there. Who knows? Maybe he still would be. I don't know. Depends on how much money everybody else is losing too, I guess. But that would be there. And then 61.8 would be down here. That would be an ugly. That's why I don't like to draw that one. I don't want to draw that. I don't want to make that prediction. What if you went off this one here, Land? Well, you know what? It depends on where the BlackRock draws their numbers, have them programmed into their system. But see, that would be 90 right there. Even if we went off of here, boom, 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 that'd come down to the 90, 100% region right there. But BlackRock typically goes off of this one. That's what I've discovered. And that's 61.8 right here. 100's down here. Sorry, Elon. I don't want to do that. But this is a little double bottom right here. We're going to see if it'll hold. Let's see if you can hold right there, Elon. If it breaks through that, next number down is at 50, 61. And then if it breaks through that, it makes a little pennant formation down to 90 and 100. They could really punish him bad. Tesla. That's the dividend version. And it already made 3 drives. Look at this. Drive 1, drive 2, drive 3. And it's making counter trend right here. And it's starting over again. And it just broke that one. Oh my gosh. But this is the dividend version. That's on its way down one more time. Look at that. Hate to see it. It all depends on what's going to happen over here on the Tesla side, though. If this holds, this little double bottom here holds, and we can get this thing to start to go back up, it'll have a lot to do with what the Fed says today, whether they decide to take it or not. I don't know. Fed will move it. But then BlackRock makes their own decisions. They don't care what the Fed says. The Fed is a puppet of BlackRock. In the mainstream media, they speak for BlackRock. You got to remember, they speak for these big firms. They'll tell you to. That's why Kramer's running around like a chicken with his head cut off, telling you to sell, 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 because that's what BlackRock wants you to do. Because they want to take all of your. He wouldn't do that. You want to bet? I got video of him doing it, telling you that's how he does it. I got video, literal video. No, not AI video. I've got real video of Kramer talking about that exact strategy and how you get it done to the guys on TV. Yeah, if you subscribe to Pit News Magazine, Pit News Magazine? What the hell's that? I never heard of Pit News Magazine. That's our magazine. What do you mean you never heard of it? Of course you've heard of it. Everybody's heard of Pit News Magazine. Go get it. It's over at pitnews.com. You can get it for 50% off right now. If you just type into the code 50% OFF, that's your code right there. And you'll get 50% off. It's regularly $39.95 a year. You can get it for pitnews.com for $19.97, 12 issues all year long. Every article is recorded. You can read them. And of course, we got lots of videos in there sometime. And one of them that we put in there was Kramer, the little shit, was going in there and he was telling people, he was teaching a class on how to be a hedge fund manager and how to manipulate the market. That guy. Now he's on the TV going, "Oh, you got to do this. Oh, you got to do that." He's just a shield for the big. He's just a shield. All the mainstream media, they're just bought and paid for by BlackRock and Vanguard and State Street. So just remember that. They're going to tell you to do exactly what you should be doing. Exactly the opposite of what you should be doing. All right. That's the way the game played. That's the way the game is played. Oh, come on. I have to always do that to make that switch back. I don't know. They changed the software and it makes it do that. Every time I want to switch something, it makes me go, I can do that. But then when I go back, it won't go back. And so then I have to remove this one, which makes me go full screen. Nobody wants to see me full screen. That's scary, except for unless you want to see my Make America Healthy Again. Did you know that Robert Kennedy was in Utah? Yes, he was. Robert Kennedy was in Utah telling people, don't drink the water. Don't drink the water in Utah. You'd think we were in Mexico. It has fluoride in it. And so he's like, that's not healthy. Why are you drinking that poison? So state of Utah pulled it out. They passed a law. You can't put fluoride in the water. Most people don't drink the water that comes out of the tap anyway. What do? They pour the tap water that goes out on our lawns and in our gardens and everything. Why are we pouring all that poison, that all those chemicals that we add into our water? We just pour that stuff on our lawns. It's just a big waste. If you want fluoride, go take a little fluoride tablet. They've also learned that fluoride tablets don't work. Like systemically, it's like when you brush your teeth with fluoride, that's what actually makes your teeth hard. So by putting it in the water doesn't help anyway, and it's not good for you. And we just pour it out on the grass, and we just pour it out on our gardens anyway. It's just a waste. All right. That's enough of that. Let me show you what I really wanted to show you today. I got it sitting here ready for you. Look at this. Look at this. This is kind of cool. I want to show you this. What is that, Lan? Oh my gosh, you just scared me with all this. What the heck are you looking at? This is the S&P 500. Don't get scared. It's not scary. This is the S&P 500. All right. So the S&P 500 comes in here, and it's been in a massive uptrend as we've been speaking, right? And of course, it's had several little runs and breaks in here. But nonetheless, this is the S&P 500. And you can see the S&P 500. That's the recent drop. And you can see right in here, this next little line right here, this is called the skew. And the reason I had to pull up a different software program is not that it's a different program. This is still track and trade, but this is my live account, because you can't get the skew in the demo, because skew, you have to pay for it. And the way you pay for it is by having a live account. They give it to you for free in the live account, but yeah, it's not like you have to pay for it, but you can't get it in the demo. All right. They don't give this away to demo people. All right. Now this is what's important. What's important is this skew right here. Now, how does the skew work? What is the skew? The skew is called the CBOE, Chicago Board of Equities. All right. Chicago Board of, this is options. All right. So this skew tracks how many put options are being purchased. So what are put options? We use put options in the S&P. As far as the S&P is concerned, we use put options to hedge, right, our short position. So if we got a big long position, rather than selling out, we can buy put options. Now, this is what big players do. It's kind of a little bit more rare for smaller players, unless they're a little bit more sophisticated, to be buying put options to hedge. Now, that you can't, you certainly can, and I would imagine everybody in this class does, because you've all been taught how to do it. But this is how many put options have been bought. All right. Let's get rid of some of these lines in here. There's a lot of lines in here. A little bit. I just put in some areas of support and stuff. Oh, I got one of those touch screens and I accidentally touch it once in a while and it screws things up. All right. So you can see these are just some resistance points, but this is kind of think of it as like a stochastics indicator. All right. Think of the skew as like a stochastics indicator, and this is normal. Now, normal's changed a little bit lately. We used to think that this was normal. This was our normal range. And so if you go back in time, back years and years and years ago. See, this was more normal. It was more normal. If it kind of popped out in here, we were like, oh no, there's a lot of put options being bought, right? Oh my goodness, look at all the put options. Wow, look at all the put options, right? All the put options being bought, right? But then things got really scary. So I think these lines, these averages, these 140 and 125s kind of moved. That's no longer kind of the standard. So, but you bring it over here and you can see from historical point of view, if we line this back up, right about the same spot right there. Okay, so these are all of the options that are being bought on the Chicago Board of Equities, the Chicago Board of Trade options. Options place. What do you call those things? Exchanges. Options exchanges. So right here, look at this. This was the very peak right up there. Look at that. That's a lot of options, a lot of put options being bought right there. A lot of put options being bought right here, and a lot of put options being bought right there. Look how many. I mean, it's just crazy. Now they got a little scared back here too, didn't they? So they got a little scared right in here and started buying a lot of put options, but the market kept going up anyway. So they started to liquidate their put options. They got a little scared right here. You can see right in here, they got a little scared for good reason. It kind of the scaling is not good on this. These were actually pretty good drops for the S&P. So they put those in. But then, they got down in here and they're like, oh, not scared anymore. Let's buy. So that's kind of in here. And then they had that big run. All right. So you can see where the big boys who buy a lot of options to hedge their big portfolios, right? Because they don't want to just sell their portfolios out. Now, this is mostly big hedge funds and big banks and people who are protecting their options and protecting their downside. They buy put options. And so you can see that when they start getting really nervous up there, this is a place where you can start being careful, being ready to do your analysis and say, well, you know what? These big boys, they know stuff and they're getting scared to death up in here. And boom, 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 down that baby rocked and rolled. So I put this is just kind of the static setting of 140 to 125 down in here. This is back into normalville, but I put this little moving average channel in here like that. Okay, so I put that in there, and that helps us know when we're really peaking out. We're really getting up into some nasty numbers up in there. Anything below that, we're starting to, they're getting the flush out. See that? See how it flushes down? So we're getting the flush out here. So this is the flush. This is the flush. So big flush. Now that means there are not a lot of put options. Now they started buying put options again. They started to rise. And this is the high. This is like really scared here. Used to be the olden days. Back in the olden days, that was like, wow, we got a lot of put options out, right? And so they put a lot of put options out again, and then that thing flushed one more time. And it's down here. But look what's happening. We're down here at this bottom. Put options are about as low as they've been. They're not buying a lot of put options. Now you see they're starting a little peak right in there, buying a few more just in case that market flushes. But most people are not worried right now. Most of we're down here in the normal bill of put options, just kind of normal. So although this looks like it could be a little pennant formation, right? A little pennant formation coming out to the peak like that. So this could be that little pennant formation. It could drop one more time, which it certainly could. But there's not a lot of put options. They're not real scared it's going to do that. You can see if they were scared, it would be back up in here, at least up in, I mean, look, this one here, they brought it way back up here. Now it's way down here. Do they think it's going to continue? Not really. And then you got the VIX. The VIX is the fear factor. All right. You ever watch that TV show? The Fear Factor. This is the fear factor. All right. So they coming down here. Fear factor went way down. Look at that on this thing here. And then suddenly they got really scared. Whoa! They got really scared going the other direction. Now there's another one in here called the S ball that goes the other direction. So S ball is one that is the opposite of the VIX. So I can't like Let's make that. So there's that one. So it goes in more in line with the S&P. Okay, but it's just the opposite of the VIX. So you can see it's just like almost exactly opposite. Let's line it up just a little bit better. There we go. So that's coming down. And of course, look at what it's doing. I mean, look how high it is. This is like, when was the last time it was that high? Never. Like one time back here. Like, look at this. Back in August 2024. You can go back on your own VIX and look at that and see. But look at the VIX generally travels down in this region here. This is like really high VIX. That's really high VIX. So something like this, it's just like, whoa, that's like unheard of. Like one time. Look, we go clear back. Last time it was that high was back in 2000. That was that big .com thing, right? Or that was, yeah. Look at that. So this is where the VIX usually runs, and that's where we're at right now. So it's a scared market. This is one scared market. That's what that's telling you. They're scared, but they're not that scared because they're not buying put options. So they're not that scared to the downside. So the scary is coming back down is the point I'm trying to make. I think we're seeing the scary because it spikes like that and then it comes down. Every time it goes up, spikes and comes back down, spikes and comes down. Even this one spikes and it comes down, but it can spike and go up and spike and go up. And that's kind of a president's way back there. But this thing, these are all tools that you can use to help you kind of fill out the fear factor. But the real fear factor for me is this one here. It's the skew, because this is where people are actually putting their money on the line. This is just a mathematical model of fear. So I believe I'm a believer. Let's get that lined up. There we go. I'm a believer that this is what the most important one right here is called the skew. And the skew tells you the put options, and they're not buying put options. We're down here in the normal range. So they're not too worried about it going down again. Doesn't mean it can't. I mean, they've been wrong a bunch, right? I mean, it's gone down and they weren't buying their options, but they can certainly be wrong. But the big boys they're not buying options. Keep that in mind. Keep that in mind. I don't know if it means anything, but it could mean something. Would you like to continue closing track and trade? Yes, I would. There were options pending. Did you want to close? Yes, I did. All right. So there we go. Tesla. Got some downside potential, but let's see if it'll hold that bottom right there. Let's see what BlackRock does. All right. See if BlackRock turn those machines back on. All right. Let's go over real quick and look at our our dividends. See if we made any money during this downtrend. Where'd it go? Where'd it go? Here it is. I'll get it. It'll come up. Promise. Is that it? Yep, that's it. There it is. Okay. Let's bring it full screen. Okay, this is our UBI, Universal Basic Income, back of the napkin spreadsheet. So this is where we're making our dividends. And if you've been following along, you know that we got a little bit of money in YMAG. We got 50 grand in a symbol. That's our stock symbol, YMAG. We got 5,000 in NVIDIA. We got 54,000 in Tesla. We got $500 in Microsoft. I don't know why we did that one, but we did. And then we got 56,000 in Misty. You know which one I want to put money in? It's not on our list. But you know what? These are the magnificent 7. Misty. You know where I want to put some money? Let's go see if we got any money first, because we got no cash. Let's go see if we got some money. All right. So we're going to go over to the first one is YMAG. When was the last time YMAG we put some money in YMAG? 320. So yeah, we should have some money on YMAG. 3. We're into 4. We should have a couple in YMAG that we've missed. So the last one was 320. So let's go over to our dividend chart. And that is here. And we're going to look at YMAG. I don't like this chart. This sucks. Get me back to the normal. I want to go back home. Home? No, that's home. I don't want to do that. How do I get out of this lousy chart? I hate these charts. There we go. Now we go to this one and we go to YMAG. YMAG. I got 2 sets of charts here. I don't know why they have 2. I like this one. Okay, so we're gonna come over here, and now I forgot. Got distracted. So 320. That was April 3rd. 427. There's 320. So that's the one we already did. We got this one, March 27th. Ooh, that's only 8.4. Well, I guess that's in line. That's what they've been doing. Okay, March 27th. Let me take this, and I'm going to move it off the screen so I can do two things at once. That's amazing, Lan. You are so smart. You can do two things at once. Okay, so we're going to go 3, 27, 2025. And now we got to figure out how much we get. So we got to do the math. We got to do the math. Lan, how come you have to do the math? Because if this was the real money account, it already does the math. But since we're in the demo, this is just a demonstration version. We have to do it by hand. So we have to come over, and what we do is we say, how many shares do we have? We have in YMAG, we have how many shares? We've got the shares. Oh, they're way over there. On my sheet, I moved those. I moved the shares way over here so I can get it to them easier. If you guys want to do that, you can do that. 2,631 shares. So we got 2,631 shares. So we do the math. I put that in my calculator. And then we multiply that by how much they give you per share, which is 8.4 cents. So 0.084 equals, that gave us $221. So we're going to put that right here. $221 and 00 cents, 0.0004. So there. So now we got to take that number and we got to come over here and we got to put it into our March mag right here. Oh, it already put it in there. Did it? No, it didn't. Or did it? What is that? 33. Did it get it? 33. No, man, you didn't do it. No, what was wrong with you? Okay. So we got to go just through the 31. So we got to go just the last 4. Okay. We're going to take this, we're going to go auto sum, and we're going to just grab these 4. 1, 2, 3, 4. And that's how much money we made in our YMAG. So we have $50,000 in YMAG. And this month of March, they gave us $1,223 in dividends. That's nothing to poke a stick at. I mean, that's pretty good money for, 50 grand. All right. Now, the next one was Microsoft. I don't think where's Microsoft right here? 3.6. Yeah, we already got paid out on that one. So we might be ready to do a Microsoft for this month. Let's go see. Come. All right, let's bring it back. And now we're going to go to Microsoft. MSFT. Are you guys following along and doing this with your portfolio too? So now for Microsoft, oh, that's Microsoft. We're not in Microsoft. We're in micro MSFO, right? Isn't it MSFO? I need more. Let's make this sheet. Sorry, guys. We're going to have to make the sheet smaller. How do I do that? View, 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 view. Go to view. Okay. And tell us to zoom, zoom. Come on. Zoom. Custom 95. Let's go to 75. There we go. Oh, that made it a little too small. Let's see if we can do a little better. 75. Let's go to 90. 90. Is that better? I think that'll be good. I think that'll be good. Ooh, problem is, let's go in here and fix this. Couple in. There you go. Oh, that one screwed up. Let's come over here. We don't want that to be so wide. Oh no, that screwed everything up again. Undo, undo, undo. Okay, now come in. Just do the 1. Like that. There you go. There you go. Now you feel a little better about that, don't you? Yeah. Okay. All right. So where are we at now? Now we're trying to do Microsoft. Now we got the screen so we can see more on the screen at once. Oh, wait a second. I didn't have it scrolled. What the heck? Oh my gosh. Lan, you're struggling here. You're struggling. 890 is still too. Let's go to 80, 85. We still can't get everything on the screen at 85. Oh, well, we'll have to, let's see if we can work with that. Okay, so now the next one is Microsoft, but it's not Microsoft, it's MSFO. You know what? We don't need all this stuff. We can just put that right there, and then we're good. Okay, so MSFO is the next one in line. Why did we have that one the next line in line? Oh, that's the next one that pays out? No, I can't remember. Let's just go down the list. We got NVIDIA, NVDY. NVDY. And I got to bring that over here. NVDY. So they paid us on March 27th. Have we got that in? Did we do a March 27th in NVDY? March 24th? What? Oh, that's the wrong one. Oh, no, that's the right one. UBI. Wait, that's, oh, you know what? I put that in the wrong spot. I put that in the wrong spot. This is supposed to be down here. Because that was not a dividend. That was seed money we put in. So we got our first dividend on, this is NVDY. See, we investment seed money. We haven't received a payment on it yet because we put it in on 3/24. I put that in the wrong column. Did you guys, why didn't you tell me? You're supposed to be my wingman. All right, so that's okay though. I won't blame you. All right, March 27th, March 24th. That's why we put it in there. 4, 5, 6, 7. So we put it in there so that we could get our dividends. Okay, so we got how many shares do we have? We have, oh, why didn't it tell us? Did I screw up? Let's go see how many shares we could have had. Oh, we got to go see the price back on. When did we put it on? All right, I got it. I screwed up. Sorry, guys. I made a bad mistake. 324, we put this thing on. What was the price on 324? Oh, I can't tell on this stupid program. Give me my program. 324. We got to come over here and we got to go into TSL. Oh, no. NVDY. Okay. So on 2024, wait, April. I screwed up. 324. Started our first investment on 324, and I didn't write down how many shares we bought with $5,000. January, February, March 24. April, March 24. Right there. So let's say on March 24th on the open. What was the open? The open was 1721. So let's say that we got 1721. So our average price is going to be 1721, 17.21. And so now we're going to have to come in here and say how many shares? 5,000. 5,123 divided by 17.21. 290 shares. So we have 290 shares. 290 point, let's just say 53 shares. Okay, so we have 290 shares. Now we can do our math. Now we can come in here and say they were paying us out on NVIDIA. They were paying us out. On March 27th, we got 78.7 cents. All right, so on March, now we come into this one. January, March 03-27-2025. Amount. Oh, what did we say? So we got how many shares? 290. 290 times 0.787. 0.787. 228.23. So we got $228.23. Man, that was a lot of work for $200. Sorry to make you sit through that, but I screwed up last time. Let's see if we can do it right this time. Okay, so that number goes over here. This is the first, oh, that's still March. And that was for NVIDIA. NVIDIA is right here. So that was March. We get this number right here. So we go equals that. Boom. There we go. So we made $5,768 last month. The previous month we made $7,400. So that's what happened to us on our dividends Misty went way down, 3,900 to 2,600. Tesla went from 2,000 to 1,600. So that's because the markets fail. That's the difference between our. So look in January. January made 7,700. February made 7,400. And in March, we made 5,700. Wow. And we got 166,000 invested. Yep. Let me see. And we need a total. Let's total these up. Go back home and hit sum. No, don't sum them that way. Buddy. This way. Come on. Can you do it right? Enter. That's better. So we've made 20,000. Make that bold. Bold and give it a big outline so we know that that's what that is. Okay. Grand total. So that's our grand total. What? There's already cancel. I just want to go there and I just want to make that bold. Okay, so that's how much we've made so far this year in dividends on our $166,000 investment. But of course, we keep putting in. So they gave us 20,000 already. 20,906. Wait, why have we got a different number? Somewhere there's an error in the mathematical model. This should be the same. 16349. Unless it goes back. Have we got something before? No. I'll have to go double check and find out what we've got an error somewhere. Somewhere there's a little error. We've missed something somewhere. So those two numbers should be the same. 20,000, 20,000. They're off by 6, 7, 8, 9. We're off by $300 up here. Don't know which one's the real one. All right, let's go do the next one. So let's go into April. So back to April. So we finished off March. We made 5,700 in March. Let's go see April. Or do we have YMAX? We don't. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Okay. We should move this up here. What do you think? You guys want to move that up there? It's an active one. We'll put it up there like that. And this is an inactive one. So we'll bring it down here and just put a little gap between them. Oh, come on. There we go. All right. So now we're going to go into April. Sorry, this is tedious sometimes. But that's why we're working on a software program that'll do this for you. It's just not quite ready yet for prime time. So we still have to do it manually. Let's see. Come in here. And what's the next one? So now we have to check YMAG. So we're going to go back to YMAG again. Okay, YMAG. And we do have one in the month of April. So we have a payday in April. Let's go see how much we get. So we're going to get 97 cents, April 3rd. What? April 3rd. So come over here to April 3rd on YMAG. I'm running out of space. I'm going to have to fix this. 3. This is 4. No, where did my date go? Don't go away. 4/03/2025. And it's 9 cents. And how many shares did we have of that one? We have 2,630 shares. 2,630.19 times 0.097. $255. So we actually went up on that one. 255.12. Look, our dividends went up from 221, 220. There's a 381, but we went up from 221 to 255. So it's going the right direction. So that is a 4. So that needs to go up in here. So we're going to go like this. April 1st, we're going to go equals sign. Dun, 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 dun. And I'll fix that column so it's going to work right for next time. And then we got Microsoft, MSFO. Let's go see what we get with MSFO today. Did we get any money with MSFO? MSFO. What's the date? April 3rd. We do. And how much are they going to give us? 33 cents a share. How many shares do you have of MSFO? MSFO. We have 28 shares. All right, it's better than nothing. 28.13 times 33.4. 33.4 equals. That's not right. 28.13 times 0.334. $9.39 for MSFO. Well, it went the right direction. So we got 04, 03, 2025. And we made $9.39 in dividends. It's going the right direction. It's going back up. Equals $9. Better than a stick in the eye. Misty. Holly wanted me to do Misty. We put $56,000 into Misty. Do we get any money from Misty? MSTY. Not yet. March, April. We haven't got paid out on Misty yet. But when Misty comes in, we're going to expect somewhere around $2,600 at least. MSFO, come on, you center that right now. Okay, nothing from Misty. I don't know if we got anything else coming in. TSLY, that doesn't come in until day 27, so I know we don't need to look at that one. NVIDIA comes in on day 5. Oh, the NVIDIA, cancel. Stop it, Mr. Excel, Mr. Microsoft. NVDY. Did we get one? No. The last one was in March 27th. Did we already write that one down? NVIDIA, March 27th we did. We only got $28. That's not right. Why does it say NVIDIA? Oh, 228 right there. We must have just barely started NVIDIA. We did. $5,000. Tesla comes in day 27. Microsoft comes in at day 12. Why are these not in order, Lan? Put them in order. Can I put that in order? Can I move it up without screwing up the whole machine? We'll see. That should work just like that. 27.19 is ahead, but that doesn't. And Misty, we should just take Misty. The reason it's not up there is because that's part of the Magnificent Seven. We're only trading 3 of those. And then this is, Misty is Bitcoin. All right, so wait a second. 9 goes ahead, Apple goes ahead of 12. So take this one and move it up 1, 2. So 12, 19, 27, Amazon, but it's not active. Oh, this one's not active either. That's why we have that up there. Just grab it and move it up there where it belongs. Okay, so day 5, day 12, day 27. These up here, they get paid out every Friday. So that's why those are up in a special one by themselves. And then we got the Magnificent Seven, and we're only trading 3 of those. And they're day 5, day 12, and day 27 are our paydays. So MSFO. We did that one right there, $9. So our next payment is going to be Tesla coming in, and that's not clear till the 27th. And then, we got Misty coming in on the 19th. So not for 10 more days. So, all right, so that's the best we can do. How much are we up so far? So this thing here says so far this month we're up $264, but our big payments come in down here. And then so far this year, we've made $20,000. That's not bad money for a $166,000 investment to make $20,000 in the first quarter. So that would mean on track to make, if it 20 times 4, 20, 40, 60, 80, that'd be $80,000 in dividends on a $166,000 investment. I don't know where else you can get that kind of money. I don't know. Maybe you could go get a rental property. Buy a $200,000 house, $166,000 house and rent it and get $80,000 a year off of it. Think you could do that? No, probably not. All right, guys, that's it. That's all I got for you today. Hopefully, we'll drop that down. We'll drop that down back to the software, and that's the name of the game. That's what we do. That's how you make money. That's how you make money. Whether you want to make money or not, I don't know, but I would assume that since you're here, you probably do. If you enjoyed today's class, go ahead and hit that little button, thumbs up, and let me know that you're still with me and that you enjoyed the class and you learned something today, maybe. And we will see you guys tomorrow for Power Hour. We're going to do a little day trading. Yesterday, we had a really good day trading day. We broke $3,000. So come with us tomorrow afternoon at 1 o'clock, and we'll do a little bit more day trading in the futures market and see how we do. All right, guys, that's all I got for you. If you have any questions, let me know. And okay, so I'm out of here. We'll see you guys tomorrow. See you tomorrow.